Well, I think if you look at the company, the valuation when it came to the market a couple of years back, it was worth about £8 billion, now worth about £11 billion today. So not much in terms of an increase in the valuation. But was that a legacy issue of being attached to the UK stock market?
It's rallied nearly 50%, and that's not much.
Well, it's an increase, but for this sector, that was really hot at one point.
You mean frothy?
Well, hot. It was red hot.
So what?
But the point I was going to make was, is it the stock, is it the stock exchange it's attached to, or is it the sector itself? And I was going to argue the point that I think it's the sector that's been suffering so much, which is why perhaps it didn't get more upside that it would have liked at this point.
It's rallied over a third. What's the problem?
Well, I think if you look at what other stocks
What
have done,
valuation should it be? What valuation?
Well,
what should it trade on? No, I'm fed up with these companies who think that they should trade at X multiple in the US compared to what they get in UK. Plus, the fact, it's a much bigger pool out there as well. You can get lost in that pool as well. As many of our commentators said, what forward valuation should a fintech company trade at in the UK or in the US? Just, bearing in mind, what do the big companies trade at? What does Google trade at? What does Amazon trade at? Should we have a look at some of these companies? Microsoft trades at 30 times forward. Should it trade at the same kind of valuation as Microsoft? I'm not so sure. So Microsoft trading at 31 times forward as well. Should it trade at the same valuation as that? Would it feel better if it did? Well, funnily enough, it does. It trades at 30 times forward. It has got the same valuation going forward. So on the poor, pathetic UK market, where they can't get the price that they deserve, it trades at 30 times forward. That is over double the valuation of your average FTSE 100 stock as well. So what price should Wise be trading at?
So I loved your comparison to some big tech stocks because I think
that's what it's calling itself, isn't it?
I think the reality here, and one of the ambitions I would imagine would be linked to the crypto universe, because don't forget, fintech fortunes and crypto have been entwined over the years, and every time you see a very strong crypto market, the valuations for the sector very much get a boost. And if you think about the crypto moment we've got stateside, it is enormous. There's a ton of money pouring into the crypto space. So I like your comparison to big tech, but I think the comparison is to Bitcoin fortunes.
I'm comparing it. No, you can't compare it to Bitcoin. It's a company which has to try and make money from these products. I'm comparing it to every other valuation metrics that we have used historically since Benjamin Graham, since Warren Buffett, since all the key, since Michael Burry. So key investors over the decades have valuation criteria, and one of them happens to be forward price earnings ratio. Yeah, I'm comparing it, and I'm saying this company trades at 30 times forward. That is a massive premium to stocks in the S&P 500. It is a massive premium to stocks in the FTSE 100. It is a massive premium to a lot of technology companies out there as well, including the likes of, Alphabet. Massive premium. So what valuation should we price a sector in that has come off the top, that a lot of money's come into, that the competition is vicious? You tell me on a regular basis how vicious the competition is in fintech as well. Why should it trade, just because of some spurious link to crypto, why should it trade at higher than 30 times forward?
Well, it's that halo effect, isn't it? So when you've got other big players in the sector, Stripe, Klarna, that are seeing a big hit to their valuation, there is a potential upside or halo effect around the crypto universe, but also from the FX trade. I mean, if you think about FX right now, it is huge. We keep asking on a daily basis about the US dollar as a reserve currency, all the diversification trades that you're witnessing elsewhere, and money moving across borders to diversify away from US assets. I think this business is trying to put itself into the spotlight of what it sees as a magic moment for different forces around crypto and around FX. So it thinks perhaps the US market, which comes with extra cost, don't forget, having a secondary listing here will come with extra cost. It thinks it's worthwhile because it's going to elevate its profile in what is clearly a very different environment for this company because of those two features than what it's had in previous years.